Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex and today we're looking at the Canadian economic news that we've seen in the last month. Today is November 17th, 2020, and with the end of the year fastly approaching, I thought let's take a moment, let's have a look what's going on, dive into some of the numbers, the latest articles, the big news, and get us all up to speed so we can make the best investing decisions in the next few weeks. And let's just remember that even though the stock market's going crazy, you shouldn't have to. Now, without further ado, let's begin. So to get an idea of the overall market, let's look at the S&P TSX Composite Index, which is a benchmark of Canadian index representing roughly 70% of total market capitalization on the Toronto Stock Exchange. There are about 250 companies within the index, which gives us a pretty clear picture of what we're seeing throughout the Canadian market. So having a look at the day chart, we're up 1.28%. If we look over the last month, we have seen a huge rally since the end of October, up 8.4%. Now, if we have a look at the 1 year chart, we can see that from the February highs, we're down only about 6%, just under that. But when we take a look at this pandemic, which has been the talking point of 2020, those dark and gloomy days don't look like they're heading away anytime soon, with huge spikes in cases over the last 2 months. Seeing these new cases is obviously not the best thing for many reasons, but from an investing standpoint, it definitely makes it more difficult to judge the certainty of the market, with potential risks such as lockdowns, business closures, and many other factors that could have devastating effects on the economy and the stock market. Now, the big news of the week comes from this biotechnology company, Moderna, who actually claim that their coronavirus vaccine appears to be 94.5% effective, with this information coming out just 1 week after Pfizer announced their vaccine and how that was going at 90% effectiveness. But a Moderna executive has come out and said that the storage temperature is a big advantage for their product as the COVID-19 vaccine candidate. If we scroll down here, obviously we discussed before the 94.5% effective rate is better than the 90% rate that Pfizer had estimated. And as we scroll down here, this is extremely important. You have the ability to maintain it, as in the vaccine, at negative 20 degrees Celsius, which is essentially a regular freezer temperature at home or medical freezer temperature for up to 6 months. The reason why this is so important is because last week when Pfizer announced their vaccine, it was slightly less effective, except one of the big problems that people seem to have with it was the idea of transporting it once it was created. The reason why this is so important is over here, Pfizer, when they announced theirs last week, their vaccine had to be kept at negative 70 degrees Celsius during transportation and storage for it to remain effective. This was definitely one of the most troubling things that investors took away from Pfizer's announcement, because obviously keeping something at negative 70 degrees is quite costly and could also greatly decrease the amount of people that we would be able to get this vaccine to in a short amount of time. Nonetheless, this is 2 vaccines that have come to some very strong results, and that's great to see. Some more positive signs is the Canadian economy created 83.6 thousand jobs in October. The unemployment rate in Canada fell to 8.9%, down from 9% in the previous month, which is only a slight move and didn't quite hit the expectations of 8.8%. Nonetheless, we're continuing the downward trend. However, with the rising coronavirus cases, we could expect to see this move up again. So we have seen the Canadian dollar slightly strengthen against the US dollar in the last month, and if we take a look at the yearly chart, we can see that since March we have had a nice steady uptrend heading up to the 77 cents mark. This is some key information for any Canadian investors who are purchasing US companies, as this will assist in your exchanges and give you a little bit extra moolah on the side. Getting into some headlines, we can see that none of it is having absolutely none of it and enters a 2-week shutdown amid spike in new cases. That spike in new cases is 10 new cases, so all 15 people in none of it will be heading into lockdown. The Bank of Canada plans to keep interest rates near zero until 2023. Low interest rates means the cost of borrowing money is low. The Bank of Canada says that they have no plan to change its benchmark interest rate until inflation gets back to 2% and stays there, something that they don't believe will happen until 2023. The lower the interest rate, the more willing people are to borrow money and make larger purchases such as houses and cars. This increase in spending often leads to a ripple effect throughout the economy. Businesses are also more likely to expand, grow, and invest heavily when they're able to. A great example of this would be a telecommunications or a railway company that are often quite capital intensive. The ability to access these funds at a cheaper rate encourages businesses to not only continue but to increase their spending in times of economic hardship. The central bank says it expects Canada's economy will shrink by 5.7% this year, grow by 4.2% next year, and 3.7% in 2022. Inflation, on the other hand, is expected to be at 0.6% this year, 1% next year, and 1.7% in 2022. And this is why the central bank does not expect to be raising their interest rates until 2023 when inflation gets back above 2%. The energy sector, and more specifically oil, has been beaten up over the last few months, but as we can see, oil prices are starting to surge on vaccine hopes, and that in turn has had a great effect on companies within the sector. A personal favorite of mine, Suncor Energy, ticker symbol SU, is up 7.44% on the day, and if we have a look at the 1 month chart, since October 30th, they have actually returned over 30%. Another personal favorite energy stock of mine, Enbridge, the largest pipeline in North America, finally has received some key permits to continue a crude oil pipeline project, which is expected to begin construction very shortly. Building pipelines has continued to become increasingly more difficult, especially as society continues to push for a more environmentally friendly way to produce energy. And we don't have to look very far for evidence from this, where we can see that the governor of Michigan is attempting to shut down Enbridge's Line 5, which is a key part of their network and is responsible for moving an excessive amount of propane gas. Enbridge has said that there is no credible basis for the governor's actions, and with Sonia Savage, the savage she is, the Alberta Energy Minister, has strong words for the governor and will be fighting this one in court. Alright, let's rapid fire a few final news articles. Here we have Loblaws increasing their dividend because they have improved their sales and their profits. And this one got a little bit of backlash from the media and the employees as they are not choosing to reward their employees with increased wages. However, it should be noted that Loblaws increased the hourly pay to their employees by $2 during the middle of the pandemic, given everything everybody was going through. This was never a permanent move, so this has come to an end, and right or wrong, they're taking some punishment from the media. Next up is video and media platform TikTok, that's on the tick clock, as they are running out of time to sell their US assets to a US company. Now here's an article titled, "Will COVID-19 Kill Christmas? Maybe, maybe not. But you know what will? Not hitting that like button." Now here's a story that pushed a few buttons. Pfizer's executives sold shares on the day when positive vaccine news came out. So you'll recall earlier that Pfizer was one of the companies that released news and data about their vaccine. And this shady looking man known as Albert, the CEO, sold nearly $6 million worth of shares on the same day from releasing this news. Obviously, the news sent Pfizer's stock price up quite high. Pfizer's shares were up 7.7% on the Monday that they announced this news. And that's why Albert decided to get his greedy little mitts in the honeypot and cash out the majority of his shares. So slimy Albert did sell 132,000 shares at $41.94 a piece. He still owns 81,812 shares, but this sell-off was almost 2/3 of his original holdings. It also pays to mention that Sally Sussman, the suspicious man she is, also sold off a large portion of her holdings. Now we have DoorDash, who's trying to get more cash as they announce their plans to go public in an IPO. They are the biggest player in the US food delivery industry. Now, before you get excited on this one, definitely do your research. They have doubled their revenue this year, but they have been losing money since the day they began. Well, that's all for today. Remember to like, comment, and subscribe to see videos similar to this one.